Again, I implore you to remember, f your puts, f your calls. Jay Powell has you by the balls. God bless my money printer.
What is going on YouTube? It's Brendan from Market Makers. Guys, big video for you today because Powell talked yesterday and boy was he dovish. Very dovish speech. The markets loved it. The markets rallied. We're going to go over what the yields are doing, the DXY is doing, how it affects Bitcoin because ultimately, guys, as you all know, this is a rally to fade. The last couple of videos, I told you we'd be looking at long setups. We haven't got that pullback yet because the markets are just moving up and up and up on the large time frame. So let's look and see where they could hit some resistance to see if they're going to top out, pull back down, a bullish pullback and move up, or if it's going to be our three-wave pattern giving us a double top that we can potentially trade and go over on Monday's video. So we're going to look at all of that. So Powell came out and he talked about progress on inflation, left out all the hawkish verbiage. He was reading off a teleprompter. Markets absolutely loved it. He wasn't supposed to raise, but many people, including myself, anticipated him being hawkish. So how did this affect the markets? Let's go ahead and talk about this really quickly. We have the VIX dropping like a rock. It's at 1590. And it was all the way up at 23 at one point. So the VIX is dropping. Yields on the 10-year are dropping. Now, keep in mind, this can go right back up because tomorrow's the jobs report. Now, as you guys know, the jobs report last time, the last three prints have been hot. It was over 300,000 last time, but it's all part-time jobs. Majority is part-time jobs. And actually, over the last three job prints, we've lost 653,000 jobs. What does that mean? Well, the last time that we had three prints that we lost 653,000 jobs, that's happened three times in the last 25 years. It happened in the pandemic, it happened in the GFC, and it happened in .com. So we need to look at that and keep that in mind when you get these job numbers. Look under the hood. We'll go over those Monday when they come out tomorrow, okay? But as of right now, yields are dropping. You could see this shoot right back up depending what we get on these job numbers. Very important to monitor that. Look at the DXY. It's holding true. It's holding at 106 spot 092. It's 106 spot 108 at the moment. You can see it's just teetering around this range. 107 spot 864 is where I think it's going to get to on that next push up. And how's this affecting the markets? Let's look at the baby S&P. Look at this, the baby S&P. This is the Dow. So this is your 30 companies plucked from each sector of the S&P. And you can see, guys, remember the death cross is incoming. You have the 50, you have the 200, and you're right at 33,763. This is plus 488 points today. Plus 488. So very, very bullish right now at the time of this recording, 33,765. One thing I want to show you guys, we made a death cross video a few videos ago. It has a sugar skull on the thumb if you guys want to check it out, because I've talked about how people talk about death crosses and they try to go back 20, 30 years and they're like, oh, what can average anywhere between 3%, 30%. Look at the death cross. You have to look at it in the proper market. You're in a bear market. You're in your first cyclical bear market since the longest bull run in stock market history. That's where you are right now. So these matter more once you enter a bear market. And you can see your death cross here coming out of this rally all the way down. This dropped the Dow 17%. Okay. So notice, because you're going to see this in all the indices. So I just want to show you this on the Dow. You'll see this on individual stocks. You'll see this on Bitcoin. Death cross was here. What did the market do? Market rallied up into it, made a double top, and then came down, okay? You'll see this rally into a death cross quite often. You saw it just before the death cross here too. Market sold off, came up, made a double top, came back down. This is important because look at the positioning of your 50 and 200. They're right above you just like they are now, okay? So this is what I think is going to happen. I think these are all, this is a rally to fade. We had a 5% GDP print just south of 5%. Already the Fed is projecting 1.2% GDP for Q4. Maybe that's low. I don't know. It's the metrics they're using, but they're predicting 1.2 and the economy is slowing down. We had the ISM numbers come in, was it yesterday or the day before? Lee, show them the chart. Manufacturing shrank to 46.7. This puts you back at the pandemic levels. What does that mean in a macro sense? It means the economy is slowing down. Be aware of that, okay? The economy is slowing down. Again, price moving in waves. You guys know we looked to long, we looked to short at the market on the S&P at 43.82. Nice, almost 300 bar drawdown, 6% move on the S&P. Last two videos I told you guys I was expecting a rally. Now that we have the rally, we have to look and see where this can go. And on the Dow, you're hitting the 786, 33,758 right now, bouncing off it just below the 200, just below the 50. At this juncture, guys, I would recommend pulling fibs from multiple levels. Your fractal high from your recent top to your sell-off, but as well as your rally high down to your recent sell-off, okay? And see if you get any fib confluence, see which fibs are tracking more true. And you can see, let's take off the smaller fib. The 486 fib at 33,958, that's going to give you a lot of resistance as well. You're bouncing off the 786 from the smaller fib, but this is right there if you're 200 and you're 50, okay? And we could see this come up. We got euphoria in the market. Look at this. We were talking about looking for a pullback, right? Or I was talking about looking for a pullback. You don't have a pullback. You have a straight move up. Now, we might get a rejection somewhere up here. Pullback can get a fib, see if that lands us at the 382 to 5 to 618, and then get some projections for more upside targets. But ultimately, when you look at the trends of these markets, I'm showing you the Dow, but we're going to move to the S&P. When you look at the trends, they do this over and over again, right? So we have to watch our shapes that form, whether it's a larger double top, meaning a three-wave structure, or simply coming up, hitting resistance, whether it's at 34 or slightly below, come back down, come back up, print that lower high, okay? These are the trade setups we're going to be looking at here in the marketplace as this forms. Let's go ahead and talk about an esoteric recap from the last couple of videos. Lee, are you going to play that chanting every time I say the word esoteric? Guys, I am the last Bavarian Templar Knight. So I'm giving you these esoteric fractal patterns here in the marketplace and showing you how it's influencing my trading, because it's giving you some nice ideas for potential landing zones, tops and bottoms. And as you guys know, part of the reason on October 5th, I made that video crash warning October 18th, I showed you this fractal pattern from the pandemic low up to the all-time high and projected it from the all-time high out, and it landed on October 18th. And what happened October 18th? We had the beginning of a 6% sell-off, 300 bars in the marketplace, right? And I gave you the trade before that move happened the following week at 43.82. This is another fractal pattern that I'm looking at here in the marketplace, a law of three natural law pattern. All-time high is your first leg to the market low at 3,500. Your next leg is your rally. Now, what's interesting about this is 201 bars and 203 bars. You see 201, 203, it's a symmetrical move. It's market geometry. So what I did was a projection for the next leg down, 202 bars, the bar difference between the two of them. That lands you May 6th. So in other words, another way to look at this is just simply like this. Another way you could look at this, Elliott wave traders may look at it like this, or just pattern traders. This is an ABC move. This is an ABC move. As you guys know, I had a 5-wave pattern up, esoteric wave theory, and then I have your 3-wave pattern down, okay, your ABC move. The difference is this ABC move is going to take out your market low. And by the way, talking about returning to the market lows, that's not just me talking about returning to the market lows. You guys might remember this guy, Jason Hunter from JP Morgan, chief technical, not equity, technical strategist. He's their chart guy, right? When I showed you my S&P chart that had the channel within a channel, a week later, he's on CNBC showing the exact same setup. And let's see what he says now. Lee, run the clip.
And Dow hitting session highs at this moment. Let's get the next key levels to watch from Jason Hunter. He is head of technical strategy at JP Morgan. It's good to see you again. I'm reading these notes and I'm like, man, Jason's negative on the market. 3,500 is your medium-term target. So we're going down 15% on the S&P from here?
Yeah, so that's over the medium term and likely a first half target for next year. Over the near term, we've been talking about this 40-50 area as the base case target zone for the fourth quarter. And while we've closed most of that gap from where the market peaked out at 4,600 during the summer, even as we approach it, we're hesitant to put money to work just yet, for a couple of key reasons. Sentiment's not quite extreme just yet, and the relationship between price and sentiment tends to be a progressive one, so a lot of damage could happen in price to finish off that sentiment number. And we just don't see the typical patterns that you'd see at the high frequency level to suggest the market's basing just yet.
That's right. 3,500 is his prediction for the next pull down. That's your market low, 3,550. Where I think he's wrong is you're taking out that low. But so the difference is, guys, if you're getting the information a year early from me, because I know the market cycle, I know the market pattern. And now you have the largest investment bank in the world, their chief technical strategist telling you he thinks the market's going back to the low. So just keep that in mind. If you understand the structure of the market you are trading, you can get these forecasts, these predictions, because the market moves in patterns and cycles that it repeats all throughout history. And these things are trackable and tradable. So let's move back one chart. We went over, once again, another esoteric concept, the lunar cycles, okay? The lunar cycles here are really key, because you can see that they've been tracking amazingly, right? That's the whole key with these esoteric concepts. Does this mean anything to me if half of these didn't give you any trades? No, probably not. But in fact, it's been giving you a lot of really good trades, tops to double tops, full moons and new moons. We went over this last video, so I'm not going to do it all again. But what's interesting is we had our Ring of Fire eclipse, the yellow line, October 14th, followed by the lunar eclipse, which gave us the exact bottom for the rally candle up. The pivots I'm watching here from an esoteric perspective, because as you can see, the new moons and full moons have been providing tops. And in this case, the eclipse provided a bottom. November 13th, November 27th, your next two key dates moving up. We had this happen at the all-time high. I went over this last video. Massive trades were available somewhere out there. There's an 18-year-old girl with pink hair or blue hair, and she's trading only off of lunar cycles, and she's probably crushing the market if she understands that we are in a down cycle, because you've been getting a lot of trades here, a lot of confluence as a confluence factor with Fibonacci patterns, double tops, and your moon cycles, right? Absolutely crazy when you think about it. I'll cover solar cycles Monday, guys. I want to keep this update kind of brisk for you to get you into the weekend and show you what I'm tracking. Let's look at the channel perspective of the S&P. So once again, I want to look at this from different Fibonacci levels, right? I want to do this from the rally high down to your market low, and you can just see up, up, up on the candles. The 486 is at 43.50. The 618 right up here at the apex of your two channels, right? 618 is right here at 44.16. This is where I anticipate the most difficulty for the market, basically a rinse and repeat of our last trade of 43.82. That's where I anticipate the market really struggling, is back in this zone, back where you made this previous double top, the previous three-wave structures, right? And you keep breaking down like this. So we're just moving up in a straight parabolic move. Want to see where we hit resistance? Could be 43.50, could be a little bit higher, and where you start to pull back from. And then of course, here on the daily time frame, you have to be aware of any type of W pattern that you may form, which is going to give you higher upside targets, right? So we can look at that as well. The second fib that I want to pull and look at this as far as targets is off of this recent fractal high that we had, because this 786 is always my favorite fib to look at when you start forming bearish structures. And I want to layer some things on here. Let's go ahead and throw the 50. Let's go ahead and throw the 200. We got above the 200, just knifed right through it with a dovish Powell. And we're moving towards the 786, moving towards the 50. And what's the actual price of that 50? That's at 43.54. Right? 43.54. So again, that's going to line you up with that larger fib pool here. You can see that. Look at that. Sitting right there at 43.50. That 43.50 range, let's watch and see what happens. We're at 43.14. Might not get there today. If we continue the euphoria, we might get there tomorrow. And we want to see what that does, because when you take away your fibs and you look at this from a zoomed out perspective, I know the bulls are very bullish. The bears are just, always bearish, obviously. But guys, look at it from a larger perspective. This is a downtrend. This is a serious downtrend still. This is a nice move, but it's a serious downtrend. You're not even back up at your previous resistance yet. How price behaves at that 4350, 4400, which gave us this nice top, sell off, rally up. We shorted the second top, 300 bar drop. This could be a rinse and repeat trade setting up. Again, barring a very bullish W, and you do have a W here as well that formed, as you can see. This is a lower low W, but you do have a W that formed there as well. So we could pull, and I showed you this in a previous video, in a very bullish situation, if you rallied throughout the end of the year, 45.84 is what my target would be at the 1618, taking you right back to that rally high. But once again, not my base case. You got to flip that fractal high. You got to exit this channel, re-enter this channel. I'll believe it when I see it, right? Because this is all about being patient from a swing trading perspective and waiting for your pattern to form. You make your top, you sell off, you rally back up, and then you break back down. Okay. This is all about waiting for that trade. So I don't have a pullback yet for a smaller W, and I don't have an inflection point where price hits, comes down, comes back up again. Okay. So we don't have a whole lot here yet, just a steady stream of up candles. What's this doing on the MFI? MFI is still bearish. It's still below the median line. You got a little bit of an inflection happening in the money flow right now. I mean, you can see your highs and lower highs all through the trend here. So I'm not bullish here, guys. I'm bullish in a sense of this can move up. But if this gives me a nice retracement and the market wants to stay bullish, yields stay low and they keep dropping. If the job numbers, which are predicted to come in at 180,000, if they come in around that number and yields continue to drop, this can keep moving. But I would love to see a retracement if I was going to trade this. If not, I'm going to be patient and wait for it to top out, because these tops can give you excellent trades. So we'll see what happens. We don't have the genetic makeup yet of any type of trade. You got the daily, you just got four up candles in a row. Nothing showing me the resistance is holding just yet. We'll see how this closes out today. How's this affecting Bitcoin? Well, 41K is still on the table. It's definitely more on the table now after Powell than it even was before, which I still thought was going to happen anyways, because you look at the 35,697, your 618, again, that's the fib pull from 48.2 down to your market low at 15.5. You hit it and you got rejected from it. But this fifth wave here, guys, off my esoteric wave theory, 41K, this looks highly doable, especially if the S&P can continue to push back up to 4,400. Okay. No guarantees, no certainties in life. You're overbought still on the MFI. But if Bitcoin can do this move, and this looks like quite a simple move, does it not? This looks like a very simple move for Bitcoin to get up here. It's very parabolic. We exited the diamond, shared this trade with you October 23rd. Within 8 hours, 12 hours afterwards, Bitcoin did the pump, nice 11% move. I tweeted this out the other day. If we end up hitting my 41K and giving from the trade that I shared with you guys, if we end up hitting that 41K, so it's almost a 30% up move here on Bitcoin, okay? And if Bitcoin starts topping out, I told you, be worried. I would be more worried if in this tight little trading range here, this little mini cough structure, is if you start topping out in this area and you start seeing Bitcoin come down, maybe down thrust, come back up, make a lower high, down again, make a lower high. It starts doing this type of thing, and the S&P starts rolling over at 4,400, 4,350 again. This is a lot more concerning, looking like you could possibly be going back down with Bitcoin as well. But we have time, especially if the markets stay bullish the way they are, to get this impulsive move up. And that's still, I wouldn't say it's my base case. I think it's 50-50. To me, it's a coin flip. And to me, that's really good, because we had this nice trade. We got this nice 11% breakout move. And if it can continue, we got a 30% trade. If it starts topping out in the daily, which again, I just don't have enough candles to really tell you, looking at the 8 hour, you're just flagging up towards the upside here. But again, knowing that the markets, knowing the backdrop, knowing yields are dropping, the DXY staying stable, it's a bullish environment. A lot of trading is understanding the environment, not just looking at a particular technical on one single asset. If the DXY stays stable, if yields continue to drop, the markets continue to rise, it becomes a bias to move to the upside. If it all starts reversing Monday, Tuesday, Wednesday, it becomes a bias you could be topping if you don't start moving the price, right? You don't make a bullish pattern. bullish pattern in this case, like we talked about, get above 35,697, make your pivot, right? Make your pivot, break out to the upside, and there's your fractal you can trade once again on a breakout to the upside, okay? That would be your bullish bias, and your bearish bias coming down, making that pivot back down to the downside. So let's look at the Nasdaq. Nasdaq, I would do the same fib pools, guys, from the rally high to the low. You bounce right off the 200, as well as looking at this from your fractal high, because again, when you see these moves in the Nasdaq, let's just measure this really quickly, because the Nasdaq's been very, very symmetrical here in its declines. If we take it from the second fractal down to this 8% move down, what about this double top? Because you got two double tops in a row, 7% move down. And what did this give us? This gave us 8.39% move down. So again, this is something that Nasdaq's done 2 times previously in trend, and then it's pumping back up. The key is on this pump back up, and here's an example of a pullback, right? Rally up, pull back, rally back up to your top. We're not pulling back. We're just zooming. We're zooming because of how dovish Powell was. But the key is here is 786, 1572 from the smaller pull down. And if you take out that fractal high, you could potentially be going to the 1618, taking you above your previous rally high, okay? Again, not my base case yet. Trading is about steps. It's about levels. Want to see how you behave here at 15. Want to see how you behave as you get closer to this range, because this could come up, hit the top of our channel, and make another baby double top like it's done over and over since the rally has started failing, 3 months ago, back in July, okay? So this is what I'm looking at, a descending channel. You have an up move and a descending channel waiting for a bearish structure or an up structure, a bullish structure to form. How will that bullish structure form here on equities, not being as parabolic as Bitcoin? Simply, it'll form a Wyckoff range. The difference is it won't make a lower high and break down. It'll get back on top of it and pivot out, right? Just like this, just like the structure you had here, your W, your basic W pattern. Went over these structures in a previous video. W's, there's your low, there's your higher low, right? So there's your move up, pull back, higher low, breakout. Looking for something like that in a bullish sense over here, or just printing, coming up to resistance and printing our double top, right? So we'll keep an eye on that. Gold. Lots of people asking me about gold. Lots of people asking me about oil. Guys, Monday videos are going to be longer. Monday videos, I'll go over my solar cycle on Monday. Monday videos are going to be more of a teachable lesson. I want to try to give you these Thursday updates. Lots of people asking for lots of assets. Can't please everybody. Keeping the core ones on here, and I'll swap in and out the stocks at the end, okay? And I got the European indices coming up as well. If you guys want to trade these markets with us, we really would appreciate your support on this channel. Please do check out SimpleFX and BingX. They are sponsors to the show. We are not monetized. With both of them, you get a special, unique market makers bonus. And on SimpleFX, you get up to $5,000 instantly in your account based on your first deposit. Check out SimpleFX, guys. Fantastic exchange where you can trade gold. Been over this many times, guys, but we shorted gold at 2067 and we long gold down here at the bottom in our Discord at 1800. Okay. Now, what I want to show you here on the MFI, we talked about previously about gold being an emotional asset. And what I mean by that, somebody asked me to expand on that. Gold is largely a fear trade asset. So you had your previous runs up to this range based on peak inflation. We had that last run up off peak inflation. Then as inflation started coming down, gold started coming down. We had this run up now based on the conflicts going on, specifically the one in the Middle East. So you'll see this in gold. But what's unique about this as well is look at your MFI. See my green arrow here? Your MFI here over by the Elon rocket peaked out. MFI peaked out here on this candle. Price continued to rise as you got bearish divergence on the MFI. Gave you a great trade. The big run up that we shorted, look at your peak MFI right here on this fractal high. Let me zoom in so you guys can see this, okay? Right on that fractal high, pull this down, get rid of these moving averages, and let's do this a little bit quicker. There we go. Right on this fractal high was your peak MFI. You see this? And then what did the MFI do? Money flow. Down, 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 down. What did price do? Waved up, sold off a little bit, and waved up for that peak euphoric bounce, and you had net bearish divergence on the MFI the whole way down. I think this will play out the same way over here. MFI didn't quite get as overbought. It's just been teetering right up here, right on the line, toe on the line, right? Pulled back a little bit. If we can get this last burst, maybe up to this higher level, and then you'll see this. You'll see gold continue to rise as the MFI drops down, which may be what's happening now. We'll see it's kind of going flat, but you see the momentum starting to roll over as well. Now, this is dangerous. Same with oil. Okay. People ask me to cover oil. I'll cover it on Monday. This is dangerous. The same with oil, because in recessions, metals sell off. Been over that many times. Oil does as well. Go look at the pandemic. It went negative. Okay. But with the conflict, again, with fear, supply and demand issues, you're one event away from gold just shooting up. Again, just shooting up because of something that happens that you cannot TA, you cannot control. And it's the same with oil. You're one event away from oil shooting up. And if everything starts coming to a close, like I said, and there's some closure on these issues, you're going to see these sell-offs. So I'm waiting for tops to see what this does with gold. No rush on it. There'll be plenty of time. We talked about this in last video. If the U.S. indices pull up, you're going to see this in the Footsie. You'll see this in the DAX and the CAC. We have those up next as well. And we shorted the Footsie up here on the Discord. Guys, the price fell down. We almost got to my 1618 target. Not quite. We got the 4262. Wanted to see this come down to 7200. I'm sorry. We got to 7262. Wanted to see this come down to 7200 with these other fractal lows, but you got the reversal with the US markets. Your key area to obviously monitor is the 50 at the 618 at 7513, and then your 200 up here at 7627, and you could very likely end up between the two of them, okay? So key resistance areas to watch. You want to see when the US markets really tank out, and you can see the degradation here in the MFI with your highs. You're basically going sideways in the Footsie. You have that death cross. You're going sideways in the Footsie, and you have a little bit of a dead cat rebound bounce. And guess what? All of these, you can see the trades that you print, right? You can see your double tops that you print, your three-wave pattern. So be patient, guys. Trades present themselves and give you opportunities. Let this come up. It'll stop somewhere. We'll see if it pulls down. And if it makes a lower high, you have a tradable top. And once again, dissension in the market. Conversely, if the markets, for whatever reason, which again, I don't think is going to happen, but if you just had this pull up, pull back bullishly, you could potentially trade that pullback when you hit a fib, and then you'll have some upside targets making your W pattern. But as of right now, guys, with the Fed predicting the GDP coming down to 2% starting in Q4, we just had a 5% quarter, but they're predicting massive degradation in GDP going into next year. So we shall see. That's why you didn't get that hike. Although I do think you're going to get another hike if inflation picks back up again, because it's slowly been ticking up the last few prints. This is what I'm watching on the Footsie. And let's flip over to the CAC, the French 40. We're hitting the 486 at 70.85. Death cross on the CAC, just like I showed you on the Dow, guys. Lots of times you rally into death crosses, but they die and you move down. Okay, so watch 70.85. I would watch the 618 at 71.76. Same situation, be splitting the 50 and the 200. Watch and see if that gives you resistance. I guess in a very, very bullish scenario, you could watch the 786 at 72.91. But I think these markets are going to top out soon with the US markets and at least give you a pullback, right? That pullback will either come up for the lower high or it'll give you a W pattern where we can take fibs and get targets to potentially trade. But I think it's going to be more something like this, okay? Like you're seeing across the marketplace. This is the November, December Santa Claus winter solstice rally, but I think you're getting ahead of your skis here, and I think all these markets are going to pull back when they impact strong resistance, which they're all just shy of doing. So we'll have some more candles on Monday to go over all of this. Looking at the German 40, same thing, fractal high pull down, and you could do this from the all-time high. Fractal high pull down, bouncing right off the 618, 15,194. You have your 50, you have your death cross, you have your 50, you have your 200. Watch that range, okay? 15,194, 15,359 for the US markets, 15,570 right here in this range. Lots of resistance just above you. The bullish thing that could happen is if you get a nice pullback here where you can pull a fib, get a nice pullback, and then you come up and you break your pivot, your W pattern, break your pivot, then we can get upside targets of where this could go to before it potentially tops out. Okay. That's the bullish situation. What it's doing now, even though, yes, it's price rising, this is not overly bullish. It's bullish in price action, not from a pattern perspective, because what these tend to be is sharp moves. You have a sharp move up, you can have a sharp move back down, and this is how you get these double tops, right? Sell off, sharp move back up, and then you come back down. So watch this. We'll see how this develops here on the DAX as well. Looking at Tesla, we had our sell off, we had our gap down. Told you I'm waiting here. We're trying to challenge 217 again, which was basically our Fibonacci break for this massive double top structure, right? We've been over this many, many times, but that larger double top structure that we had on Tesla inside of the smaller double top structures inside the channel. But I want to see if Tesla can reverse, come back up. I like Tesla more around 249, very parabolic, high beta. Tesla can move around, not in a rush to trade this. I want really strong resistance if I'm shorting Tesla, and we'll see what this does because you already got a gap open here. But I'm waiting more towards the retest of the channel, which we could see if the markets stay bullish. If we get a pullback, a bullish pullback, and then a break of that pivot on the upside, you can see that. I wanted to show you Ferrari one more time. I was about to take it off until it did something, and Ferrari had their earnings. They beat earnings, and look what it did. Big gap. But this is what I want to see, okay? This is what I want to see from our W perspective is this. You want to see this because you can trade these moves, and looking at the 1618 at 329, if the markets start topping off, I want to see if Ferrari can get to 329. And from a Fibonacci pattern perspective, this is an X5 pattern. I would take it smaller here from this lower fractal. It doesn't really matter because I'm doing it from this perspective. And this is what I'm looking at, guys. A 1618 expansion from B to D. Doesn't matter. You can move this over to here as well at these ratios. But I'm looking at this expansion at 329 for Ferrari if it gets there. Now, if it gets there and the markets are still bullish, guess what? It can go higher, right? Again, confluence with the larger markets. Want to have confluence, but that was a big move, a big gap down from 305 up to 322. This will have a lot to give. So this is the burst that it got. It got the burst. It has the hot GDP, has Americans buying expensive cars still. And if the Fed's right and we lose 2/3, 3/4 of that GDP going into this next print at the end of the year, I think a lot of this stuff's going to come back down and give us some really nice tops. Actually, you know what? One thing I want to do on Ferrari real quick. And I'll be rotating these stocks in and out. I know a lot of you don't care about this. You can trade this on SimpleFX, a lot of individual stocks and global equities, okay? Just looking at this, we got above the 786. So parity gets you to 329. So 329 is going to be key right between here and 329. Be a very good spot to look at. How's Adobe doing? The big AI play. AI. So Adobe's pushing right back up to our peak resistance at the 1618. I told you this looks bullish to me. Now, Adobe doesn't report until this is going to hurt it because the markets roll before this, December 13th. If the markets roll before that, Adobe's going to pull down with it. But you can see the coil. You see the coil? And you got your higher low structure here, and you have this vague W pattern here as well, right? So you got your W pattern, and you have that move up. I'm looking at 608 on Adobe. If the markets stay bullish, I want to see that 608. And again, Fibonacci confluence for a target, harmonic expansion, 616. So I want to see this. And I don't know what Adobe's numbers are going to be. Nobody does, obviously, unless you work at Adobe, obviously. But if Adobe has good numbers, if the market can hold up that long, which I don't think it will to December 13th, but if it can hold up that long, then you could see Adobe hit these targets or go higher. I think you may be moving up from a lower level, even if Adobe has good numbers, because as the market falls, Adobe moves with it. So this is a good stock to watch because it wants to be bullish, and it wants to be bullish. It wants to win a battle in a war that's already lost. The war of what cycle we are in the markets, right? You can have great stocks that have great performance, but ultimately they will capitulate with the markets. So worth watching. Nvidia, one that everybody wants to know about. Again, we've been over these structures. You had your rally high, lower high, lower high. You have your low, and then your lower low. So their numbers are coming out soon, the 21st, I believe. Yeah, Tuesday, November 21st. So you have a bearish topping pattern forming right now in Nvidia. You have your 50 above you, your 200 coming up from behind. This can still move. A lot's going to depend on what they give as guidance, right? So a lot will depend on guidance. But again, looking at this from Fibonacci perspective, you're stuck at 433, which is your 486 fib. The 618 is just above you at 444. The 786 at 458. So you want to keep in mind this type of move, right? The double top move, which again is nothing more than a high, lower high once again. And if you pivot out down here and break down below 403, you're breaking below all these fractal lows as well. You have this big gap. We went over this gap right here. You're going to fill that gap if you break this double top, right? You're going to fill that gap and you'll be back down here around the 300 range. Now, if this can hold up and you have really good numbers, really good guidance, well, you're going to see this parabolically potentially because of how NVIDIA moves with a high beta. You could see this move up and give us our X5 pattern here as well, right? So we could see this happen here on NVIDIA. And this would be my 1618 harmonic expansion target that I'd want to see. And that's at 527. So you can see this. It all depends on those numbers from the NVIDIA and if the Nasdaq can keep moving up as well as the S&P and give you a bullish backdrop before a bearish rollover. Okay, that's what you want to see. How long these rallies can last before they fade. Let's look at AMD for my man in the YouTube comments who's been very patient. AMD pulling a fib here from the high November 21. I wanted to show you this at 486, right? So you're at the 486 fib, 107 spot 91. That's 107 spot 98. You have this declination channel here. You know, if you want to squish this up, if you want to be really bullish, obviously, you could say this is a cup forming a handle. You could say this is a W, a giant W pattern, right? And this is your pivot and you're trying to hold this fib and it's going to go to the upside. You could say all that, but again, my market premise is we are nearing the rollover, showing you guys that fractal breakdown on the S&P. We're in a downtrend. I don't anticipate taking out the rally high. I'm not saying the rally can't move prices up, but I don't anticipate taking out that 4,600 high. So knowing that, I'm looking at this from a different level, potentially topping out levels, right? So 618, 122 is just above you. If we look at this, you have you had your death cross here in AMD. You see that? You had your death cross and then you decline. Again, death crosses in bear markets and you're coming into forming a death cross again. Let's pull this from the rally high, 132, and get this rally low here, right? Come on, candle, cooperate. Trackball always has to give me problems, right? I can't get it for some reason. All right, I don't want to hold this up too long, but let me see here. Oh my God, the mouse is like frozen. Hold on. There we go. It doesn't want to stay there. 382 at 108. All right. That's what you're hitting. 486 at 112, 618 at 117. I would be looking at this at the 618, 786 level. And again, I'd just be looking at this as impulse up, move down, reaction rally back up. 618, it can top out here. It can go up to the 786, top out here. And I'd be looking at this potentially forming a massive ABC, a three-wave pattern, a double top pattern. That's how I would be viewing AMD. Where would I be bullish on it? Breaking that fractal high, 132. You're at 107, almost 108. Is it possible? Sure. But when is their earnings? Let's see when their earnings are for AMD. AMD, they're not out till January 24. Yeah, they already had their earnings. So that came out October 31st. So this is your rally from your earnings, my man. So this to me, again, this is bearish to me, knowing the overall market structure. This could come up some more, but I'll be looking for this to double top out. And, we'll see how it plays out. Guys, I hope you have a fantastic weekend. Definitely consider checking out our room. Please do like and subscribe to the video. Would love to have you guys push us over 30,000. Really would appreciate it. Take care, everybody.